Ladies and gentlemen, Greg Mikulowski from ForexLive.com. This is a Forex Quick Look. I'm going to take a look at the dollar versus yen as we head into the close for the week and then into the new trading week. And it's always good to take a look at the technical levels as you head into the new trading week. You got to be prepared and be aware and be prepared is what I like to say. And in trading here today, what we saw was a sharp move to the downside. That move to the downside saw the price move pretty from about the 149.50 level all the way down to the 148.50 level, about 100 pips to the downside, and then we saw a rotation all the way back up to the upside. It retraced nearly the entire move, did a full lap in the dollar versus yen. Now there are some technical levels in play that are of interest. In particular, on the downside, what did we do? We came right down to the 200-hour moving average. That's the green line in this chart, and the market found support buyers against that 200-hour moving average. Also, right at that level was a 50% retracement at 149.507. So both the 200 and the 50% retracement, both key technical levels in my book, held support, which is a good thing because buyers were leaning against that level with a stop below the level. They were risking a little to potentially make more than a little. And if they're still in that trade, they nearly retrace the entire move from the high to the low, all the way up to the high, nearly 100 pips on the tops move in that run to the upside. So not a bad trade, just for risking a little. That's what you try to do in trading, folks. Anyway, the move to the upside has also taken the price back above the 100-hour moving average right here. And once we started base against this level, the last 5 or so hours, I've seen the price move steadily to the upside. And going into next week's trading, this 100-hour moving average currently at 149.156 is going to be our target support level and our barometer for bullish above and bearish below. If the price can remain above that level, the buyers remain in full control. If the price moves below that level, I don't necessarily say that the sellers are in control, but the market is more neutral at that point, and we would expect to see that the price would head on down toward the 38.2% retracement. If it breaks below that level on the 200-hour moving average, then we're talking a little bit more control for the sellers. We'd have to get below the 50%, and then we further open the door to the downside. But the progression would be get below the 100, get below the 38.2, get below the rising 200-hour moving average and the 50% retracement, and also this low right here. And things are moving more in the favor of the sellers. Absent that, and the buyers are pretty much still in the game. Anywhere in here, the buyers are still in the game. Okay, the sellers still have to prove themselves, but they are more in a neutral environment, so that is something to be aware of, and also puts a little bit of a hope for sellers at that point. Now on the top side, obviously we have to get above the high price that we saw in trading today, and also the high price that we saw, for the most part yesterday in the London morning session, I guess, early New York session, right around the 149.50 level. Get above that level, and we start to look toward the 149.70 level right here. Above that, and we start to look toward 150 on the top side for the dollar versus yen, and if we get above 150, that probably opens the door for further upside momentum for this currency pair. It's just a nice natural level to get to and through. On the top side, there is a trend line here connecting the highs from 2023. This is the I guess that's March high right here. This is the end of June highs through here, and the trend line cuts across right around the 50.69 level, so that would be another target on the top side. And then we look toward the 2022 high price that happened back here in October at 151.93. Those are the levels on the top side. But right now, what we can say is that the market is a little more bullish in the short term off the hourly chart, getting above the 100-hour moving average and staying above that level, with more work to do to the upside, with the targets being the high prices that we saw yesterday, and then on Wednesday's trade as targets on the top side. On the downside, it would take a move below the 100-hour moving average to start to turn the bias a little bit more into the neutral area and give the sellers some hope. But that without that, the buyers are in full control. There you have it, a look at the dollar versus yen as we head into the new trading week. I hope you found it interesting and you make some money off of my ideas. Good fortune with your trading. Bye-bye now.